Welcome to Investors Insights, episode number 145. Today we will be discussing, is this a possible bear market? Wow. And if you like what we have to say, take time out of your busy schedule to let us know. If you don't like what we have to say, well, please let us know on that too, because we love the debate, discussions, and we love to hear from you. And I'd like to also remind you that you can listen to these Monday market updates in your car or at the gym by subscribing to our podcast, which can be found on iTunes and the Stitcher app. We're very proud of that we can provide it, and we hope you take advantage of it. So let's get started.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy team at 5 Plan Partners. Rolling 3, 2.
Guys, had a long weekend.
Yeah.
Market was closed.
It was.
I think a lot of people were glad the market was closed. We'd seen the stock market go down for or S&P 500 go down for the third straight week. Mm-hmm. And so one has to ask themselves, what's causing this? Is this supply and demand on a domestic and global basis? Everybody's out there questioning, are we buying? Are we selling? Mm-hmm. Not only products, but also in terms of the markets. So, Bobby, you did a great job earlier this morning kind of talking about some recap and some things going on. So let's share that with our viewers.
Yeah, Greg, you said it. It was another rough week in the market. It was a combination of oil trading below $30 a barrel and China. China's concerns, China's slow growth. Actually, China reported GDP for 2015 yesterday. It was a 6.9%. Now, that was in line with expectations, but it's very obvious that they were in a slowdown. Mm-hmm. Not a hard landing, but a slowdown. And so, that combination, again, we're going to be looking at that combination again this week. Where's oil going with the Iranian sanctions being lifted yesterday? Yeah. And so I had a question by a client, and with all this negative news coming out, tell me some positives. And so there are some positives. Our jobs numbers continue to look good. In fact, our labor share of GDP is just now starting to get ramped up. And then wage growth is looking better, and consumer confidence is hanging in there. So there are positives. Obviously, if you're watching the news loves to drive the hysteria, especially the past 3 weeks with the market going down.
And they've got a lot to work with. I mean, and let me say this, we had discussions earlier this morning about the impact China really has on the United States. It's really not that much in terms of our economy and their economy. If you really analyze it, people look at the map and go, my word, that's a lot of people and a lot of that landmass. But keep in mind, when Greece was making headlines, everybody was disturbed by that. And Greece's economy was about the size of Dallas-Fort Worth, Texas. Mm-hmm. So you have to put things in perspective. China is nowhere near where the United States is in terms of production and services and the way we export to the world. Mm-hmm. So, Trey, talk about this comment I made earlier that we're looking at supply and demand both domestically and globally. And the reason I'm saying that is it possible to have a bear market without a recession?
Great question. It certainly is. Like we were saying, like Bobby was pointing out, the U.S. is not really in that weak of a point from an economic standpoint. It looks like our jobs are getting stronger. It looks like the economy is not really shrinking. The consumer's got a little confidence, but that doesn't necessarily always mean the stock market is strong.
Right.
We've seen
and also the stock market can be a reflection of things to come.
Right. The stock market, it discounts future events.
Right.
And also the stock market is a supply and demand instrument for the world. The global investor, people are fearful around the globe. The risk off, people can trade out of the stock market. So since 1945, there have been 7 instances where the stock market has entered a bear market without a recession. Okay. And so bear markets are when the stock market is down. The S&P 500 measured in this instance by 20% or more. And so it's happened more than 7 times, but 7 times without a recession. Right now we're down around 10%. So that says there could be another 10+% of downside risk without us even hitting a recession.
So the big debate that people will hear on the news media is basically, we're just having a 10% correction. Mm-hmm. And it could be that. But the other side of it is if the data continues coming in the way it is, it could very well be a 20%, which puts it in bear market territory.
Correct. And what we've been seeing of the data lately is that on the rallies, they haven't been very supported rallies. The volume
Point
hasn't
that
been
out.
great.
Yeah.
We like to see 9, 10 to 1 upside to downside volume on sustainable rallies.
Right.
We haven't really seen that. And each rally has been sold off. So that indicates, technically at least, that we should expect more downside risk than upside potential, because there's not a huge catalyst, or there's not a huge risk on trade of people money flooding in at these bottoms. So, and also we follow things like the VIX, which is the fear gauge, is what they call it. That kind of shows overreactions. It was in the 45-50 range back in August.
Mm-hmm.
It hasn't even come close to that range yet. So we're not at a point where it looks like people are getting confident again, over unconfident,
Right.
which people typically mean revert back into the upswing.
Sure.
So it looks like right now the weakness in the market indicates that we're more likely to go down than up. We're more likely to hit a bear market, which doesn't mean there's a recession. And historically speaking, that's when you can really get some good opportunities, because the market right now is trading at a premium.
Right.
And if it goes down 20%, that premium's wiped out, and you can get things at really good values. You have to have dry powder on the sidelines to take advantage of that.
Right.
And that's somewhere we're looking at raising our cash, raising fixed income level on in some of our clients' accounts to take advantage of future values.
Right. And those of you watching, those of you that are clients already know this, but those of you that are new viewers need to understand that we run things by committee, and that we bring our data to the table. We analyze what we're looking at with our research and everything, and then based on that, then we vote as to how to move. And in this particular case, I think we all agreed to get more defensive in this market. Agreed?
Agreed.
Right. Yeah. So on that note, just know that we are making changes to the portfolio. We like to protect the downside, and in addition to that, have plenty of cash on the sidelines, so when opportunities are there, we can take full advantage of them. It's still a very violent, volatile market, and you can navigate through that, and that's what we plan on doing. So with that, we appreciate you taking time to watch this vlog, and stay in touch, and we'll listen and wait for your feedback. Thanks.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.